This is the World Financial Report podcast. My name is Randy Marshall. Joining us is Harold Siegel, our financial and diamond expert. We're taping on January the 11th, 2018. Our time right now is 8:12 Mountain. Harold's feeling better, got a little bit of a cough, the same for yours truly. Here in Edmonton, we had some warm weather after the deep freeze, and now it's cool again, heading back into warmer weather. It's been a crazy, crazy winter. US dollar this morning as we tape at 92.42, Canadian dollar 79.64, gold at 13.1850. The gold-silver ratio is around 78 to 1. Silver 16.98, platinum 9.75, palladium $1,071. It was over 1,100 this week, and that's the highest that it has ever been. And remember, Harold recommended it a number of years ago at 180. So if you continued with that trade, you've done very well. WTI at 63.84. Citigroup coming out this morning saying between Donald Trump and war, it could go to 80. Brent at 69.20. Nat gas 301. Bitcoin in US dollars 13,722.57. In Canadian dollars 17,231.56. Now they were spooked. Bitcoin, the markets this morning, South Korea coming out and putting a trading ban in place on Bitcoin. Also yesterday, the markets were rattled because of China coming out and saying that no more US treasuries, potentially, because of what's happening in the United States with their deficits and their debt, this huge tax break that Trump just put through. Also in Canada, we saw volatility with the Canadian dollar. One of the reasons, Harold, NAFTA, according to Canadian officials, they believe it's going away, and Donald Trump is going to pull the plug on it. And if he does, then here in Canada, it really opens up the door to what will happen going forward. The Canadian economy seems to be, in some parts, doing well. The job numbers came out last Friday. They did fairly well. Now the question is, no NAFTA, what does that mean for the financial markets of Canada? Warren Buffett came out and talked about cryptocurrencies. We're talking about, obviously, Bitcoin and others. In terms of cryptocurrencies, generally, I can say almost with certainty that they will come to a bad ending. Now, when it happens, or how, or anything else, I don't know. But I know this. If I could buy a 5-year put on every one of the cryptocurrencies, I'd be glad to do it, but I would never short a dime's worth. And he says that he does not believe in the cryptocurrencies. And Harold, what are your thoughts as we get to a Thursday of the financial markets?
Well, again, it's fairly obvious that trading in Bitcoins is ridiculously risky. Last week it was up to 20,000. Today it's down to 13,000. So with countries not jumping on board, we could easily wake up one day and find out that Bitcoins are absolutely worthless, not something I would ever really want to invest in. Because, again, you're talking about a cryptocurrency that most people don't understand, that most of it is owned by just a few people. So when they dump it, like obviously happened this week, you saw a $7,000 drop in the price of Bitcoin. So, again, unless Bitcoin is ever backed by something substantial, like there is talk possibly about a cryptocurrency being actually backed by diamonds or even pink diamonds from Argyle, then you have something. But right now, you have a currency that is basically worthless, that is just trading and is extremely volatile. So again, something that we never got involved in, never recommended to any of our clients, just way too volatile and way too speculative, not something I would put a penny into. We are getting a rally in gold, though. Gold has actually moved to $13.23 today, up $6 on the day. In fact, this was a very strong week for gold, but it's still trading within a range. There's major support in gold at the 1,300 level, but there's major resistance in gold at 1,350. The biggest resistance in gold is going to be at 1,380. That's a very important number. If we ever got two closes above 1,380 in gold, we would then look that gold could really start to make a major climb and could realistically try to come back and hit one of these days that $1,900 level that we saw back in 2011. Silver's trading right now at $17.08, up 4 cents on the day, and basically silver's got resistance at around the 17.50 level. $18 is heavy resistance, and basically support is trading right now at about $16. As you said, Randy, the biggest move is actually coming in palladium. Palladium is up to hit $1,100. Now, when we first started trading palladium, and I started trading palladium back actually in the 80s when it was trading below $80. So basically, to see the market go from $80 palladium up to $1,100 that it's basically at right now is an astronomical move for palladium, because palladium is really used in catalytic converters. And basically, palladium started to gain tremendous strength when the price of platinum was at $1,200, $1,300, $1,400 an ounce. And platinum and palladium are both used in catalytic converters. So obviously, the investors were buying the palladium because it was much cheaper than platinum. At this point here, platinum is trading at $966. Palladium is over $100 higher. Most people don't know this, but when the first time the palladium actually rallied to the $1,100 level, there was a huge premium on it. It was extremely difficult to get. Palladium is mined by the Russians, and they were playing games with the prices. Do you realize that palladium almost bankrupted Ford because they bought so much palladium at a much higher price, a premium, than $1,100? I think they bought it at around $1,300, and then the Russians crashed the price of palladium all the way back down to a few $100s. And Ford had bought so much palladium at that point that it basically almost wiped them out. So palladium at $1,100 is a tremendous price. But again, either I think it's going to have to fall off at this point, or platinum is going to start to move higher, because soon people will be buying platinum over palladium for the opposite reason that it happened when palladium was cheaper than platinum. The other thing is that oil has very quietly made a strong move, and crude oil, which is basically trading in and around the $50 level for a long period of time, is now trading just below $65. Canadian dollars trading at 125, so it actually strengthened a bit this week. Again, it seems that Trump doesn't want a stronger U.S. dollar, so he keeps on talking it down, but eventually the U.S. dollar has got to rally, and rally very strong. That's still my major recommendation on the upside, is that the U.S. dollar is going to strengthen. Once it gets past the 95 to 96 cent level, we should see an attempt at the par level again in the U.S. dollar. But all in all, the market obviously at this point that is hitting new highs almost every day is the U.S. stock market. Many people are starting to get a little bit nervous. It's a market that has not had any pullback in all reality since it hit its lows in 2008. So this market has been on a tear. It's not that the U.S. economy is doing phenomenal. There's a lot of fear in the U.S. economy, mostly with the gigantic debt that the U.S. owns at this particular point, and that's reflected in how bad the bond market is trading at this point, and the fact that gold has been inching higher. So at this particular point, again, at this time, I wouldn't be buying the U.S. stock market at this point. It's definitely due for a correction. There's a lot of landmine out there, not only the fact that again, we're seeing a tremendous amount of debt, but you've got the derivatives market. The derivatives market in the United States is probably the most feared market of all because it's unregulated. It's in the quadrillions of dollars, and we saw what could happen back in 2008 and 2011 when the markets plummeted. And again, a lot of that was to do with unwinding of derivatives that is still an unknown market at this point, very similar to cryptocurrencies, where people don't understand that market. They don't tend to understand the derivatives market either. And I believe that that's the major market that one day we will wake up to and find that it's causing a problem in the world financial markets. So again, at this point, Randy, most of the commodity markets are trading within a range. We'd have to see gold really break 1350 to 1380 for us to be bullish on gold on the long term. And again, we're monitoring that very, very closely.
It is interesting to note that since the Fed in the United States raised interest rates, dollar has not done well. It's picked up here in the last little bit, but gold has done very, very well. Now, connect with Harold. Learn about investing in hard assets. We're advocates of having an insurance policy in your portfolio of hard assets, diamonds, gold, silver. Connect with Harold at rarecoloreddiamonds.com. He has on his website some of the world's most amazing diamonds for investment. It's like going to a museum online. And you can speak with him personally and privately. Call 1-800-432-1022. Get our free weekly newsletter, the companion to the podcast, and you can go through and read the stories that we're talking about. Listen, we know you're busy, and that's why we do the podcast, the newsletter, in a fashion that you can go through them very, very quickly. Now, in our chart of the week section, Harold was touching on it, and it's very true. Signs of euphoria are so high, investors are having a hard time imagining a decline. In the stock market, the sound of euphoria just got a bit louder. The new year isn't even a couple of weeks old, and already $2.1 trillion has been added to the market capitalization of global equities. The market is verging on such an overbought level that not even reliable bullish analysts can keep up with the new highs. Optimism is upending the once dour mood of a rally noted for the hate it inspired. The bull market, now in its ninth year, has finally reached the point of euphoria, says Morgan Stanley's U.S. equity strategist. Now we have seen a total reversal with people having a hard time even imagining how the market could decline. They wrote in a report on Monday, "We must admit the speed and relentlessness of the move is a bit troubling. A melt up, crude, tax rally, equity euphoria, call it what you may, but finding cynicism is not an easy task." And they go through some of their concerns, and we have them in our free weekly newsletter. Also another chart, the most hated rally, this is not equity euphoria gripping the entire world. And there's another story we have as well with the chart, U.S. equity melt-up already obliterating analyst 2018 targets. Wall Street's rising euphoria may spell trouble for the stock market. And these are just a few of the stories that we found this week. The one that sort of scared me the most, though, Harold, retail investors are on the longest buying spree of the bull market. And retail investors in the United States are showing the enthusiasm and euphoria for stocks since the 9-year bull market began. Another sign of growing optimism as financial markets hit new highs. Clients at TD Ameritrade added to their stock holdings for an 11th straight month in December, one of the longest buying streaks for retail investors ever recorded by the brokerage. And that helped push the firm's Investor Movement Index, the IMX, a measure that has tracked clients' positions in the market since 2010, to a new record for the month, a second month in a row. So, Harold, you take a look at this in totality, and that's why I put this in our free weekly newsletter. We want to keep our podcast listeners up to date as to what's happening in the financial market so they can profit and protect the money that they have. And right now, I would say on some level, there is obviously euphoria, which could mean very dangerous times ahead.
The general public tends to buy the markets at the wrong time. They need confirmation in their mind that the market's moving higher. So again, the general public tends to get in too late, and the stock market, like Bitcoin, is too expensive for most investors. The general middle class cannot invest in Google and Amazon and those type of stocks. They're just way too expensive. Just like buying Bitcoin at $20,000 rules out almost all investors because 75% of Americans have less than $10,000 to their name. So obviously they're not in the market. They can't afford to buy the stock market or any assets at that particular time. Even gold at $13.20 is expensive for most investors. So again, you're talking about very few that are actually invested in that market, and the people that are invested in the market are the people with the big money.
What does the average everyday person do when it comes to retirement? And it's interesting to note Gen Xers are being added to the long list of North Americans who fear they won't have a sizable enough nest egg to retire. I am in that category. Nearly 4 out of 10, 37% of Gen Xers born between 65 and the late 70s say they would like to stop working for good and fully retire someday, but will not be able to afford to. A new survey from TD Ameritrade, an online broker based in Omaha, found, and here are some of the other findings. 43% say they're behind in their savings. Half, 49%, are worried about running out of money once they leave the workforce. Nearly 2 out of 10, 17%, say they aren't saving or investing for anything. Only a third expect to be very secure in retirement versus nearly half of the baby boomers. And the reason we bring this up, Harold, is this is why many years ago we started working together on the radio, transitioning now to a podcast, because that's the way the world is going. And you've been helping people make money in the financial markets, whether it be gold or silver or diamonds or the oil market, the currency markets, even coins that have been so popular, whether there be platinum or palladium or gold or silver. We've had tremendous success with that as well. But in the environment that we're in, where a lot of people are just so confused as to what to do and really worried about going into the stock market with the euphoria, what do you think a person in that age group, born 65 to the late 70s, should be doing?
At this particular point, that's a very good question, but a very difficult question to answer because there's very few safe investments out there where retirees can put their money that they can get an income from. We don't have 10% interest rates anymore. So return on investments like in CDs and money markets and things like that are at 1%. So there's no way in the world that unless you're sitting with, millions and millions and millions in the bank, can you live off of 1% interest? So what it basically does is it drives people into the more speculative markets because there's very few areas that you can get any type of return today without taking the appropriate risk. So obviously putting your money in stocks is risky. 90% of people that trade stocks that don't know what they're doing end up losing money. Same percentage in commodities. And commodities, like stocks, can be leveraged. So people that are aggressive, that are just trying to make money because they need to make money, they take unnecessary risks. Going into a stock market without knowing what you're doing is like trading futures, and the chances of success are very, very slim. So the fact is that for those of us that are in our 60s and 70s at this particular point, or even our 50s, it's very difficult to find a way to retire because most people don't have the kind of money. The way that wealth is really built is over a long period of time, and most people's wealth is really built in their home. So when you get started, when you're in your 20s, late 20s and early 30s, and you buy your first home, you're paying that home off for most of your existence. But the fact is that a home that you may have bought, 30 years ago for $200,000 when you were just getting started, could be worth $500,000 or $600,000 today in some cases. That's where most people will look to get their retirement money from. Sell that home up in New York or in Toronto or whatever, and then move down to the lesser expensive areas for retirement, like South Florida, Arizona, those type of areas. But the fact is that I was reading an article actually this morning that for $1 million in Canada, the homes that you can get are nothing spectacular. So if people are really building equity in their homes, they're going to have to reach a point at some time that they're going to have to say, am I going to live here the rest of my life, or am I going to sell this home and maybe rent and go, to a less expensive place to live? Because even taking that money, $500,000, for example, and putting it into the bank at 1%, you're getting $5,000 a year in interest. You can't live off of that kind of money. So it's going to be very, very difficult. The thing that I'm fearful of is that because interest rates are so low and people cannot make return on investments for putting their money in the bank or in a CD or whatever, that it does force them into a more speculative market, which opens up the door for loss potential, which people at that age can never replace their money if they did lose it. So it's a very tough time at this time to think about retirement unless you put away a ton of money, it's going to be difficult for most people.
As we've talked about in the past on our other shows, that it's financial repression. Obviously, for those that are savers, you're being repressed. If you're a senior and you'd like to get 5, 6, 7% on a GIC or a CD in the States, you're not going to get it. As a result, you're getting 1%. Using the rule of 72, your money would double in 72 years. Obviously, if you take 10%, your money will double in 7.2 years. You get the idea. Financial repression is alive and well, unless you're willing to take your money and take that chance and put it in the stock market, something that I know my own mother is not willing to do at the age that she's at. We believe in hard assets, gold, silver, diamonds. Harold's website is rarecoloreddiamonds.com. Rarecoloreddiamonds.com. You can speak with Harold personally and privately about investing in hard assets, the financial markets, geopolitical markets. 1-800-432-1022 is his number. 1-800-432-1022. And get our free weekly newsletter, the companion to the podcast. It's going to keep you up to date on what's happening in the world financially and geopolitically. Now in Canada, all but one of Canada's 6 biggest commercial lenders now say the central bank will raise interest rates this month after the jobless rate dropped to its lowest in modern record times. TD Bank, Bank of Nova Scotia, Royal Bank of Canada, and CIBC changed their forecast after a Stats Canada report Friday showed the unemployment rate unexpectedly fell to 5.7% in December from 5.9% the previous month on the strength of 78,600 new jobs. And they're saying, given the tremendous progress made in narrowing the labor market slack, means on January 17th, more than likely they will be raising rates. Although, Harold, if you take a look at it, with the fear from Canadian officials, obviously government officials, that NAFTA may be pulled by Donald Trump, President of the United States, there must be some caution to raising rates going further, because you don't know what the ramifications are if he pulls the plug on the NAFTA negotiations, which Canada and many people are very fearful of.
Well, he's doing things that we should be very fearful of. He's not a very popular president, not doing the job that we thought that he would do, very antagonistic and not afraid to ruffle feathers, that's for certain. And again, if he did disallow and discontinue NAFTA, I think that would be a disaster. So we're obviously very concerned in the United States. People, it's a topic of conversation on a daily basis. Again, he's the only president that interacts through Twitter, that antagonizes people and is a bully. And I don't like the direction that we're heading in. But even in spite of all of his problems and everything that he's creating, again, isn't it ironic that the stock market can bypass all of this negativity and still continue to surge to record levels, which goes to show you that the Dow marches to its own beat. Nothing will stop the Dow unless it's something that that directly affects it, like it did back in 2008 with the mortgage crisis. But even in spite of the president that we have at this particular point, the fact is that the market keeps on going higher and higher. Something to be very, very cautious about. He's a loose cannon. Anything can happen. He's antagonistic. Just see the rhetoric that goes back between him and North Korea. It's a concerning time. Anything can happen at any time with him. And again, you really got to be concerned where you put your money, because you could wake up one morning and find out that we're in big, big trouble.
Golden Globe Awards, and Oprah Winfrey was given a Lifetime Achievement Award, and now everybody wants Oprah for president. So it's sort of interesting how times change. They don't want Trump. Now they want Oprah in the United States, another famous person who is very, very wealthy. It was interesting to note Elizabeth Warren, who's a well-known Democratic senator, was asked about Oprah becoming president. She was honest. She said, no, we already have a guy who's a famous person who's a billionaire, and we don't need another, which I thought was quite surprising, because Oprah is so so popular. But one of the things I'm very sure Oprah is more than aware of, when she was backing Barack Obama, her popularity took a hit because anytime you say or you support or do anything, you're going to alienate somebody. And if you're in the entertainment business, ideally, you want everyone to love you. And is she willing to not be loved by a segment of the population down in the United States? Time will tell, but she gave one heck of a speech and marching orders for those that believe what she does. One of the things that was a highlight, and I want to definitely tell people, if you own a PC computer. I know my PC computer, my laptop, updated last night. It did an automatic critical update. And it's probably something that if yours has not been updated, you should update it. I'm on Windows 10. Now I have an iMac and an iPad and an iPhone. And those were updated a few days ago. And the reason they needed a critical update is because of this flaw that was found, and it was called Spectre and Meltdown. Now, there was a critical hardware flaw, and it breaks basic security, and it's obviously a big concern because we do online banking and digital assets. Nearly all computers worldwide, smartphones, and other devices exposed to a major security risk. So definitely update your machines to the latest software. I know with Apple, they give you the latest and greatest software free of charge. So definitely update. Now, what this means, there was 2 separate security flaws identified in devices powered by Intel, ARM, and AMD chips. And there was a flaw in there that would allow hackers to have their way with our machines. Now, supposedly, this was known for 6 months by tech insiders. Cybercrime represents the biggest transfer of economic wealth in history, and at this point, they're saying the cost is $6 trillion annually. They believe by 2021, all digital assets and information is at risk. Cryptocurrencies, digital assets, including gold that's obviously in a paper form. Physical gold that you would have stored secretly, privately, in an area only where you knew where it was, is something, and that goes the same for diamonds and silver, is something that people need to take a strong consideration to based on this Spectre and Meltdown situation that we saw. And if you have not updated your machines, we're encouraging you to. I know I'm completely updated. Supposedly this has, for the time being anyway, fixed something that was exposed in a major security risk that people have known about for quite some time. Now, Harold, it concerns me that tech insiders would have known about this for 6 months. Finally, it comes out. Then they do something about it. Why would they wait 6 months?
Absolutely no idea. You know, the damage that was done within that period of time was so severe, you got to shake your heads and say, you know, do these guys even know what the hell they're doing? So it's a crazy time, Randy. These are not normal times. These are times that people are very concerned about retirement, obviously, how they're ever going to be able to retire, how they're going to get by, concerned about stock markets and commodity markets and everything, and this Me Too movement and everything that's going on in this world. These are just crazy times. It's really a time just to step back and evaluate which way you're going to go. I think it's a time to be more conservative at this point because, again, the risks in the market are very, very high, and there's very few investments at this particular point that you could literally go into that are safe. So, you know, think twice or 3 times about any investments that you make at this particular point. Again, because interest rates are so low, it forces most people back into a market that they're uncomfortable with at this point, which is the real estate and the stock and commodity markets. So, again, it's time to be cautious, not a time to be speculating.
On the diamond front, this week there was news, and you can see it in our free weekly newsletter. 2 diamonds larger than 100 carats, each found in Lesotho mine. Gem Diamonds has discovered 2 huge diamonds, each bigger than 100 carats, at its mine in South Africa. It unearthed a 117 carat and 110 carat D color type 2A diamond at the Letsing mine. They said in a statement on Monday, type 2A diamond contains very little or no nitrogen atoms and are the most expensive stones. And as a result, it was obviously a good start to the year for that company. It's also a good start to the year following GEM's discovery of at least 7 stones bigger than 100 carats in 2017 and 5 the year before. It's recovered a dozen diamonds bigger than 100 carats in 2015. Still, recent finds don't compare with the largest at Letseng, renowned for the quality and size of its stones. GEM sold a 357 carat stone for $19.3 million in 2015. And in 2006 found a 603 carat Lesotho Promise. And Lucapa Diamonds also had a good news year, announcing on Monday that it discovered a 103 carat and 83 carat diamonds at its operation in Angola. The company's biggest ever find was a 404 carat stone that sold for $16 million in 2016. Now, Harold, it is interesting to note that these big diamonds, they have had problems selling them in the past because there's somebody who has to take that risk on to take the rough stone, spend a lot of time planning to cut it and deciding how to cut it up, leave it as one stone, break it up into smaller parts. It's something that you would think in some ways that they would be very excited about, and I'm sure they are at the opportunity. But when it comes to selling these monster stones, it seems there is a little bit of a challenge.
Risk is high in cutting a stone like that, and you don't just sit down and cut a 300 carat diamond. It's got to be plotted out and sat down with experts and GIA and get different opinions. And in actual fact, there's stress points within diamonds, and they've got to be X-rayed, and a lot of work goes into cutting a diamond. So again, yes, it could take literally over a year just to plan to cut that diamond, how you're going to do it. And as you said, whether it's going to be in one diamond or you're going to be able to cut it up. In most cases, these larger diamonds cut down to smaller diamonds, but, it ends up as just one diamond. A lot of people will ask what happens with, when you get a 100 carat rough and it cuts down to a 60 carat diamond, what happens to the other 40 carats? In a lot of cases, it's just they're not cut into other diamonds. It's just the main diamond that they're looking to cut. So, yes, it takes a tremendous amount of expertise. And again, as technology gets better and better, again, they have much more information as how to cut that diamond, but it's still a risk. Obviously, you've got a diamond of that size, and then if it blows up or splits, then you've got a problem on your hands. So, again, there's risk to it. There's no doubt about it.
Now, when it comes to the diamonds that Harold offers, they're the rarest of the rare, the best of the best, and you can see them online at rarecoloreddiamonds.com. Rarecoloreddiamonds.com, like I mentioned earlier, like going to a museum online, looking at diamonds that you can invest in today that are the rarest of the rare. And Harold does have the pink Argyle diamonds. Go to rarecoloreddiamonds.com and take a look. Connect with Harold. Speak with him personally and privately at 1-800-432-1022. Get our free weekly newsletter from Harold as well. Now, in the United States, as we get towards the end of the show, Steve Bannon has apologized to Donald Trump and his family over comments in an explosive new book that has raised doubts about Donald Trump's fitness for office. The book is Michael Wolff's Fire and Fury. Harold talked about it on the last show, Inside the Trump White House. Now, Bannon was fired from Breitbart, and as well, now he is recanting and apologizing. Also, former CIA Director John Brennan. And I actually listened to, during the Christmas break, a half-an-hour interview through Business Insider they did with John Brennan, a very fascinating man. And he is stunned that people in the United States are not outraged over the fact that Russia was becoming a problem in the U.S. election. And he says, he's very concerned that U.S. citizens are not troubled by it at all. Also, Bell Media and Bloomberg Media announced on Monday that the two companies have partnered to transform and rebrand BNN, the business news network in Canada, to BNN Bloomberg. And they expect to have that put together in the spring. So for those that watch Bloomberg, as I do here in Canada, and those in the United States, nothing will change. But in Canada, the Canadian Business Channel and Bloomberg are going to be coming together. Also, the second stage booster section of the Falcon 9 rocket used by SpaceX to launch a military satellite failed, according to people familiar with the matter, with one saying both the booster and the satellite fell into the ocean. No parties involved in the launch have commented, as the operation is classified. Harold, can you imagine the money that was lost in that adventure? They were obviously sending that up on a secret mission to go into space. It doesn't make it, and I would bet that there was billions of dollars that was lost as a result of that.
I wouldn't doubt that either, Randy. Again, we never know the true stories behind it, but it certainly seems like that would be the case in that situation. So, again, just different times. People react different to information. The millennials, how they view the markets and view work and everything like that is changing the way that we think and invest and all that. So, again, as we get further and further into this, these new times, we have to change the way that we process information and look at things. Again, just look at the retail markets at this particular point. How many retail stores are closing because of Amazon? For people of our age, it's hard to believe that these type of stores are closing down because our generation doesn't buy online. We don't buy clothes online like the younger generation is doing at this point, the millennials. So, again, these are different times. They look at markets differently than we do. They take risks different than we do. Just look at Bitcoin. That's not something that our generation necessarily would have backed because we don't necessarily understand it. But the younger generation, the millennials, do, and those are the ones that were comfortable speculating in those type of markets. So, again, it's just different times, Randy, and we need to process information differently.
I was reading today that the majority of people that are involved in Bitcoin are young men, 25 to 35. So I think that sort of tells us everything we need to know and what Harold described. Speaking of stores, Sears is closing 64 Kmart stores and 39 Sears stores. Most of the stores will close by April, and that is in the United States. The closures will leave the company with fewer than 940 stores, down from 3,510 6 years ago. You heard right, 3,510 to 940. Kmart has been among the hardest hit by recent closures in the retail industry. It will have about 400 stores left by May, down from 941 2 years ago. And yes, things are changing there for sure. And here in Canada, soon there will be no Sears because they are in the final throes of their liquidation. One of the things we wanted to touch on before we end today's program, and that is Jeff Bezos is now the world's richest man, more than Bill Gates ever was. Bezos, now worth $105.1 billion Monday on the Bloomberg Billionaires list. He's the man behind Amazon. And I did get a chance to read an article about Jeff and his wife. And I think people have to understand, Harold, here's a guy who was very, very bright, worked on Wall Street, and had a dream. Him and his wife get in their car, drive out to Seattle, and start Amazon. And look where he is today. And that's one of the great things about not just the United States, but you can do that too in Canada, but I think it's more prevalent in the United States. But that's one of the great things about the good old US of A. Somebody has a dream, and obviously this dream is going to places I'm sure that he never thought would be possible when you become worth $105.1 billion. What an amazing total, Harold.
You better believe it. A true success story and gives everybody hope, that's for sure. If one man can do it, another man can do it.
Well, Harold, we've come to the end of another podcast. We encourage people to connect with you at rarecoloreddiamonds.com, rarecoloreddiamonds.com. What's the diamond world like from your perspective, and what do you have in the vaults right now that people may be looking at adding to their collection of diamonds, their portfolio of diamonds?
Well, again, obviously the big news is obviously Argyle. The mine is going to close very soon. It's going to close before 2020. We feel pink diamonds will increase substantially when the mine closes. Obviously, give it a couple of years for diamonds to run out, but that's a unique situation that I doubt will ever happen again. You'll get a diamond mine that produces 95% of the pink diamonds in the world, and there's not another mine in existence that's coming online. So I think that's a great play at this point. Blue diamonds have gone up tremendously. They've gone up more than any diamond I've ever seen in my entire experience in the diamond business. Back in 2005, at auction, vivid blue diamonds, important diamonds, were selling for $200,000 a carat. Recently, they've been selling for as much as $4 to $5 million a carat. That's a situation that is extremely unique to the market. Very seldom do we see blue diamonds coming onto the market. The other situation, up and coming, the next blues, I believe, are going to be green diamonds. Very, very rare. Prices are starting to increase substantially, extremely hard to get. I think those could be the next major home run in the diamond market. And then yellow flawless diamonds have done well and will continue to do well. But, diamonds are not like stocks or commodities that are short-term investments. You hold on to them for the longer term, and they build wealth for your family as you're moving forward. If you don't need to sell them for your own retirement, these are the type of assets you pass down to members in the family, and it just gets more and more and more valuable. So we highly recommend owning colored diamonds of high quality and put away for your future. I believe you'll do extremely well with them.
RareColoredDiamonds.com is the website. Telephone number 1-800-432-1022. And another podcast is done. Harold, thank you for your knowledge, and it's invaluable to have someone like yourself on a weekly basis with all your experience in the financial markets over 30, 40 years to sit back and give that knowledge out in a program on a weekly basis for those that listen to podcasts, whether you're you're a millennial or you're a Gen Xer or you're an old fart. We appreciate it. Thank you very much.
It's my pleasure. I wish everybody a wonderful weekend and a very profitable day.
That's it. Another edition of the World Financial Podcast with Harold Siegel and myself, Randy Marshall. We will talk to you next week.